So if you've been paying any attention to the crypto market over the past 1 to 2 months, you've probably realized that it is slowly bleeding. And the reason why it's slowly bleeding is because if we zoom out and we look at the price of Bitcoin over the past year, it has seen a huge surge late last year in 2024, right after the presidential election. And even before the presidential election, it was trending upwards. Well, after that huge surge, after that hype lasted for about a month and a half to 2 months or so, it started to retrace. We started to see dips in Bitcoin going from $106,000 all the way down to $92,000, then back up to $107,000 and right back down to $95,000. The market is moving, and this volatility creates an opportunity, but also these dips and retracements in the market creates an opportunity that could potentially change the entire outlook of your portfolio. Now, if we take a look at Ethereum, once again, we have that same exact opportunity, except Ethereum does not look nearly as pretty as something like Bitcoin. And the reason why is because it hasn't yet had its time in the market this bull run, right? Typically money flows into Bitcoin, and then after money flows into Bitcoin, it starts to flow into Ethereum and Solana, and then after those assets, it starts to flow down into altcoins. We've seen money flow into Bitcoin, we've seen money flow into Solana, but the money hasn't stopped flowing into Bitcoin. And frankly, one of the only reasons why Solana saw money flowing into it at a very fast pace was simply because the launch of meme coins in meme season over on the Solana network. And now that that's dying out, now that things are starting to go down when it comes to the meme space and people are starting to sell out, that is being reflected on Solana's price as well. And if you've been paying attention to any altcoins like Link, you're going to notice the same exact thing. They haven't really had their time in the market quite yet this bull run. And I personally still think that we are going to be seeing an alt season. I personally think that a lot of money is going to flow into assets that are generating solid revenue and have real business models. And ultimately, if they don't have a real business model, they're going to get left behind and their market cap is slowly going to deplete over time. That's why I invest into assets like Render, Link, Aether, Aave, Desync, Ondo, so on and so forth. A list of just a few assets that actually have a business model behind them and are producing income as a business that they inject right back into their ecosystem. Now, here's the thing. If you truly believe in this crypto space, then you know that we have some gas left in the tank. And the reason why is because Bitcoin isn't expected to just go to $107,000 and stop there. Bitcoin is expected to go to $300,000, which in reality is probably going to be about $150,000. You know how the experts like to aim high, pump up their bags, and then dump on everybody else, right? But they aren't selling quite yet. We're still seeing lots of volume over on the Bitcoin ETFs, and money is starting to flow into Ethereum ETFs, money is starting to flow into Solana ETFs, and other cryptocurrency ETFs that have popped up. That's the thing. The catalysts are still here, the institutions are still here, and people are still buying. Right now, this is a huge opportunity to, number one, lower your overall cost basis on your portfolio if you're already invested. And what I mean by that is if you already have money in, let's just say your portfolio, and you invested at $3,000 per Ethereum token, and now you invest an equal amount at $2,800 per Ethereum token, your cost basis is now $2,900 when you average it out. So by taking advantage of these dips, dollar cost averaging whenever we see these dips in the market, we can ultimately lower the cost basis on our portfolio in our DeFi positions, which means when the market does start to ramp back up, not only are we going to have fees from our liquidity positions, we're also going to have profit from the price appreciation as soon as we enter these liquidity pools. You need to be taking advantage of the undeniably good dips in the market. Like over here when Ethereum went down to 24.71, this is a perfect opportunity to invest and instantly make some profit just from price appreciation, right? It's a very good opportunity, and if you continue to take advantage of these opportunities, you're going to end up in a good position at the end of this bull run. Now, if you want to add the cherry on top, what you can do is invest into the DeFi liquidity positions. Now, rather than investing into liquidity pools like Ethereum to USDC, we would rather invest into liquidity pools like Ethereum to Link that are still doing pretty damn good returns. This one's showing a 65% APR, but ultimately they're correlated. So we're riding the market up, we're riding the market down, but simultaneously we are generating fees. There's no better time to invest into DeFi than when we see market dips. And the reason why is because you're able to get instant profit within your positions. A lot of people think, oh, I should probably wait for the market to go back up before I invest in these liquidity pools. That's like saying, I'm going to wait for Bitcoin to go to $110,000 and then I'm going to buy it, as opposed to just buying it at $95,000. Doesn't really make sense, does it? It does not whatsoever. So when people tell me that, I'm like, what are you thinking, man? Why not just open up some liquidity positions right now? Number one, get started, get in the market right now so you start generating fees basically, and those fees are going to build up over time, day by day basically, which are going to help you outweigh any portfolio losses or or depreciation losses. It's also going to help you outweigh any divergence loss. But at the same time, you are investing at a lower price, which means that you are instantly going to have profit when the market starts to go back up. You invest at lower prices, it is more likely that you're going to make money than if you invest at higher prices. Now I have this desync Ethereum liquidity pool, which is currently down $405. Now that being said, I deployed $11,000 in this pool, and that $11,000 has gone down to $9,800. But since I have been in the market, since I've been investing into liquidity pools, I've been able to collect about $800 in income on the way down, which means that instead of being at a $1,205 loss, I am at a $405 loss because I generated $800 in income. Now my profit compared to holding desync and Ethereum in the market is still $470. That means if I stuck my money in desync, stuck my money in Ethereum, I would have $470 less than this strategy right here in the liquidity pool, generating 158% APR. Even after divergence loss, I am still profiting. And these opportunities only get better and better and better as the market starts to go down. I just entered another one with 15 grand Ethereum to Aave, and that's down to like $14,500 or so, but I'm generating fees, and those fees help me outweigh any price depreciation. Those fees help me outweigh any divergence loss, and I'm going to continue to add capital to those positions basically as the market continues to go down. And that capital, it can be added straight from your bank account. It could be added from a credit card. It could be added from your DeFi liquidity positions in a flywheel aspect, right? There are so many different strategies that you can use to inject more capital, but you don't always have to come out of pocket. Like this $800 in earnings right here, I can then go and inject it right back into this position. Or the earnings that I have from a soul render position over on Radium, I can use those earnings, which is about $1,000, to inject right back into this desync position. I can use the income from my portfolio to build up my portfolio, and that right there is what a DeFi flywheel is all about. And one thing that I have always found very, very true is it's all about time in the market as opposed to trying to time the market. So with that being said, if you guys found some value in today's video, make sure to drop a like and subscribe when notifications turned on so you don't miss out on any of the content that I'm uploading on this channel. And I'll see you guys in the next one. My next video, I will be covering my exact strategy to invest on these dips and take advantage of them. Peace out.